Yes, my people, hope you are all doing well. So we're going to talk about here how to go pretty much from higher time frame down to lower time frame the correct way. So to put it simple, the higher time frame, okay, it's going to be used for your directional bias, right? Your POIs, your zones, because POIs can be determined on a lower time frame when you zoom in a bit. And it's pretty much just going to be every confirmation and order flow. The reason I say order flow is because you can see if the higher time frame is about to switch or not based on what the lower time frame is doing. For example, if the lower time frame inverses five fair value gaps and breaks through areas of demand and supply, it can tell you that this higher time frame is ready to shift back down or shift back up. But basically, is it okay? Start on the higher time frame, optional bias, your zones, go on the lower time frame. Once we tap into that, you're going to start looking for confirmation and look at the order flow to see, shall I take this trade or not? Is my game plan correct? So let's start with this week and two trades we actually took this week. So today is Tuesday and this was Monday, both from this week. So to start on with ES. So let's look at intraday. So I like to use the 15 minutes my higher time frame when I'm intraday, intraday trading, day trading to find my bias. But again, you can use a 1 minute, you can use it 1 hour. It's exactly the same. So you can see we had high, low, high. We didn't close above this high, but we took this high and then we took this low. So this was my first sentiment that price is shifting bearish and to expect lower prices. So if I'm expecting lower prices, all right, what should we do? Well, let's run it back. We should respect this high and we should continue to push lower. Let's see what we do. Okay, nice. As you can see, we respected this high and then we push lower. So now we can look at this as a possible new lower high. Sorry, lower low, lower high, lower low. But what do we notice? Okay, first let's draw a zone here. Right, if it's below 50% of this previous low to high, then we don't really want to use this as our change of character. This instead becomes liquidity. Okay, this is my 6-step model. So still bearish, really, unless we break this high. And I can see this as a sweep coming to fill this zone, coming to fill this area of supply, right? It's where a lot of people will get faked out and think this is a shift in structure. And boom, we pump lower. So still bearish. And then again, okay, we have this low to this high. And now because this mitigated 50% of this zone, this will be my real protected high. And I'm not expecting price to come above this high here. If we are going to continue bearish, a gap, and then you can see we pump lower. So when we do have a gap, I do kind of like to ignore price anyways. So if I can ignore price from the gap and go into market open yesterday. So if I'm ignoring everything to this left, right, let me just focus everything to the right of this gap. Well, I could see that we had a high, a low, a high, a low, a high. Now, if I draw this zone, you can see we mitigated 50% and we came to this discount leg 50%. So high, low, high, low, high. I'm going to remain bullish unless we actually come and take this low here. Boom, what did we do? We came and we took this low here. So the overall bias is now, okay, we have shifted structure. This is a real shift in structure because it mitigated this previous zone here. So this is now my protected high and this is now my low. So according to this, we should pull back into this previous zone, which is here, and we should continue lower with the trend. Do I have any liquidity in my zone? Well, that's where we first left it. We tapped back in and we pushed lower. So this tap here is my liquidity. Do we have a point of interest? You can see we have this beautiful fair value gap here. So I'm just expecting price to do this and then do this. So let's wait for that. That's my higher time frame done. Boom. Now on the lower time frame, I need to go and look for my entry because price could reject from here, it could reject from here, or it could not reject at all and break through this zone. The lower time frame will tell me exactly where. So let me drop down to the lower time frame, can range from the 1 to the 3 minute, for example, and I can see currently we are respecting high low. High, we didn't close below this low, so high. We are respecting bullish highs and lows. New low, new high. I need a close below here to tell me that price is now shifting. I haven't got it yet. We're still ranging between this low and this high. Come on, come on. Boom. Now, ideally we want a pullback entry, but now this would be my play. Expecting price to come, take this low. Play out, play out. Boom. All right, because you went on the higher time frame, you looked at the trend, you looked at your points of interest, your liquidity, your zone. When price came into there, you went on the lower time frame, you looked for your shift, and you knew that was when to enter. Now we have a beautiful gold from today as well, and guess what? It's the exact same thing. So again, we had a gap there overnight, Sunday to Monday happened. So let's ignore that. Let's just focus on what happened after the gap. So why did I have a bearish bias leading into today? So today is Tuesday, and I traded the London session live today. On Tuesdays, I trade the London session live with the team. So let's play it out to where Tuesday was. I jump on at 3 a.m. in the morning on Tuesday. Not quite, not quite, not quite. Okay, around here. Now, let's see. So jumped on, start on the 15, ignore everything from this gap, and let's just focus on this recent price action here. We don't have to look so far to the left because remember, we're just trading the 15-minute time frame. We just have to actually predict what's going to happen the next couple 15-minute candles, not flip it from 5 years ago. So I can start from here. I can see that we had a low to a high, and the same thing, right? We came back into this 50% of this leg. We swept this liquidity, right? We came into this demand zone. Yeah. Then what do? We put in a new high. So price is very clearly bullish. And if we're going to continue with this bullish momentum, we should respect this low here. What did we do? Right, we closed below this low here coming into London. So this was my shift. And now I'm focusing on this high. Now, a lot of people are going to be like, yo, hold up. Didn't we get a new break of structure here? Well, let's see again. Let's draw this zone. Has price come to mitigate this area since we've left it? No, right? This 50% is still hasn't been touched. So this to me is not my protected high. It's just inducement. Okay, it's just liquidity to tap into here and continue lower. And if we draw our fib as well, you can see this aligns with this discount area of 50%. So this is all reason for me to look bearish. So wait for it to sweep this liquidity, come into here. This is where a lot of people are going to see a shift in structure, not us, and we're going to start looking for sells. Drop down to the lower time frame. So for confirmation today, let's play price out a bit. We can see we had, where is it? It was here. So let's drop down to the 15 as well. I'll drop up. You can see we had this 15-minute fair value gap. All right. These areas of demand, and it lined up with on the lower time frame. This is a nice swing low down here. We had a little up down high. So this breaking was my confirmation. Boom. All right, a bit aggressive today. Took on the immediate retest. Which is slight pullback. Boom. And what we're expecting? Lower low to be made on that 15-minute time frame. Terrible delivery, but look at that. Live in the flesh. It just worked out. So the exact trades I've taken this week. Unfortunately, I've managed risk both times and haven't managed to take advantage of the profit, but both the plans worked exactly to the T. And this is what exactly I've done. I've gone on a higher time frame. I've got my bias. I'm looking at real structure, not getting faked out by stuff like this, then going on a lower time frame to confirm that, and then executing. So yeah, if you like the sound of this, if you want access to my course, it sounds bad when you say that, but videos so you can see exactly how I read the market. And come join me in the live streams every day so you can chop it up with me, ask questions, and see the trades I'm taking. Then the link is in the description. Any questions, anything, feel free to drop them in the comment section below. Apart from that, appreciate your time as always, and I'll catch you in the next video.